Chapter 7, Tax Credits. Learning Objective 4 covers the minimum essential coverage requirement, individual shared responsibility provisions, and calculating premium tax credit under the ACA. It's important to note that a lot of this has been repealed starting in 2019 and going forward. So I'm not going to require you to be able to fill out these forms on any tax return. I just want you to understand the basics of what this was, because this does apply to 2018, but you're not going to need to apply it. The Affordable Care Act, also called the ACA or Obamacare, contains a number of different provisions that affect taxpayers' income tax liability and reporting. The net investment income tax of 3.8% and the 0.9% Medicare tax, which we discussed both in Chapter 6, are additional taxes for certain high-income taxpayers. Two important tax-related provisions affecting average taxpayers are the individual shared responsibility provision, sometimes known as the individual mandate, and health insurance premium tax credits. The requirement was that everybody had minimum health insurance, and then there was a penalty tax if you did not. You could get exemptions for things like general hardship, religious opposition, unaffordability based on income, etc. Healthcare coverage exemptions were reported on Form 8965, and if you went through the marketplace to get your exemption, you had to have an exemption certificate number. Individual shared responsibility. You had to show you had minimum essential coverage, this is in reference to health insurance, or you had to pay a penalty tax for failures to meet these levels. As I said, this does not apply going forward after 2018. Minimum essential coverage is a level of health coverage that ensures essential benefits are provided. You could choose to purchase from an insurance company, through your employer, or through the marketplace, also called the health insurance exchange. All plans within the exchange met the minimum essential coverage, but coverage options vary according to the level in which you wanted to pay for it. Health insurance companies, self-insured employers, and health insurance exchanges provided you year-end tax forms. There were a 1095-A, a 1095-B, and a 1095-C. And those forms show that you had health insurance and which months you had health insurance. To calculate the individual shared responsibility, you calculate it as an annual number, then divide by 1/12 for monthly use. You apply this to each household member without coverage or that did not have an exemption. The MEC was the greater of the AGI of the taxpayer's filing threshold times 2.5%, or $695 an adult plus $347.50 per child, with a family maximum of $2085. You were also able to get what's called a premium tax credit. It's intended to lower the cost of health care. To be eligible, a taxpayer must meet all of the following requirements. Health insurance is purchased through one of the state exchanges or the federal exchange. The taxpayer is not eligible through coverage through an employer or government plan. The taxpayer's income falls below certain limits. The taxpayer does not use married filing separately, and the taxpayer cannot be claimed as a dependent by another person. There were specific tables provided that allows you to compute the credit, and it was limited to the lesser of actual health care premiums paid or silver plan premiums less the taxpayer's expected contributions to health care premiums. Like I said, I just want you to be familiar with this credit, as it was an important credit for a lot of people going into the 2018 tax year, but it is not a credit that is still being calculated today.